You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means we are back. It is Thursday. It is time to talk some futures options. Yes, it is time for TWIFO. My name, of course, Mark Longo from the Options Insider Radio Network, your home now for 19 plus years of options podcast goodness. Of course, you want to join us for a little bit extra. Theoptionsinsider.com/pro is a great place to go to check all the fun cooking over there. As you check out what fun is going on the show today, joining me for a little bit of fun, we've got our old pal, Miss Carley Garner from Carley Trading. Carley, welcome back to TWIFO, madam.
Thank you, Mark. Wow, 19 years. I guess I just hadn't realized that much time has gone by. Good for you.
Yes, we've been doing this whole options podcast thing for a little bit. Before there was an iPhone, you had to have an RSS reader to get it. Before anyone really knew what the hell a podcast was, outside of a few techies. We were a wee bit early. Who knew it would become the main thing? But you know what? We're happy for it. It's been a fun time. Been a fun ride. We'll see what we do with the big 2-0. Should be a fun time as we find out what's moving and shaking in the market this week, listeners.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody. Time for the Movers and Shakers Report, the portion of the show where we break down what's lighting it up to the light side, aka the upside, and to the dark side over there at CME Group this week. And if you just came in today, you saw the bloodbath that's engulfing a lot of the equity markets, some of the other major assets. You'd think maybe it was a blood red week, but actually, going back to the end of our show last week, we are pretty much biased towards the green. I would say we're hanging out pretty much 70-30 green over red, and certainly the largest percentage mover of the week is to the upside. But Carley, you are our guest. You get to decide where we kick things off this week. Where should we go, to the light side or to the dark side, madam?
I'm leaning towards the light side.
Oh, keeping things positive. All right, have at it.
All right, so we're going to start number 5, soybean meal up 3.48%. And number 4 is copper up 3.77%. Number 3 to the light side is gold up 3.87%. And then we also have the third metal out of 5. And number 2, platinum up 8.78%. And actually, I take it back. We've got 4 metals out of 5 on the light side. Number 1 is silver, 12.5%. Ooh, that's a big one.
We might have to just change the name of the show this week in metals options. It's all anyone wants to talk about. It's all that's lighting up the tape, Carley. It's just kind of dominated by the shiny stuff these days. Even a little bit of copper, a little bit of base sneaking in there as well this week. All right, to the dark side we go. Have at it, man.
Absolutely. All right. So coming in at number 5 on the dark side is crude oil down 1.78%. And to be honest, I follow crude daily, and I'm a little surprised to see that on the dark side list. Number 4 is hard red wheat down 2.39%. And on number 3, we have feeder cattle down 2.43%. Kind of a rough day today in feeder cattle. And number 2 comes in with rough rice down 2.85%. And then number 1 on the dark side list is natural gas down 5.97%. So Widowmaker at number 1.
Yeah, sometimes it throws people off when they come on the show because our frame of reference is Thursday to Thursday, not a time frame people often think about. So sometimes they don't think, wait a minute, what is the movement between last Thursday, I should say, at the end of the show and today? So yeah, a little bit of a different frame of reference for some people sometimes. But
it's now making sense. Thank you.
I'm used to it. Not everyone, though, is used to. You don't think Thursday to Thursday in all of your markets, Carley? What's wrong with you?
Going forward, I will.
All right. And speaking of going forward, it is time to go forward into a little bit of the old equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, time to dive on into a market that's causing a lot of consternation right now. Yup, it's the equities. You know where to go to follow along with the show. CMEgroup.com/TWIFO, TWIFO/TWIO, TWIO should also work. Both of those get you to our This Week in Futures Options reports. Once you're in that drop down, listeners, you're going to go down 4 slots to equity indexes. Then from there, product family, U.S. index, E-mini. We got to start with the big dog, the S&P. After that, we can go a lot of different places. But Carley, obviously, a lot going on in the equity world right now. We are coming hot off the heels of Nvidia's earnings, seen by many folks as very much the bellwether for this big AI boom in the market right now. And the good news was that they knocked it out of the park yet again on the earnings front. The bad news is that it wasn't enough for the ever hungry, ever ravenous market. They are crushing Nvidia. They are crushing the market, even though it seems like maybe we're getting a little bit of a rebound, a little bit of a bounce now. But kind of a wild Thursday yet again, Carley. What is catching your eye out there in the S&P?
Indeed. I mean, I think it's just probably, this is just my speculative opinion, but it just feels like everybody's positioned on the long side of stocks, particularly Nvidia. And so when you get a beat, but not like a gangbuster beat, you know, it's a disappointment, which is unfortunate. And so I think that's what we're seeing. But my big picture thinking is that this market is rather frothy. It's been trading sideways up here for several months, so it doesn't feel too dangerous. But the reality is, in my opinion, there's a good amount of danger to the downside and not a whole lot of upside potential, in my opinion. I know that that's not the most popular view, but I would say be careful out there if you have any downside exposure, because you know risk comes really fast. When we're in a quiet market like this, you know, it can surprise you pretty quickly. So just be careful.
Certainly can. We saw a lot of people piling into upside in Nvidia going into the close last night into their announcement, and it seemed like they were looking good in the first blush of the earnings until they weren't, and they dragged the rest of the market down with them. That said, the Dow has turned green on the day now, so maybe we've seen the worst of the bloodletting, or maybe it's just another head fake bounce, and we're heading right back down. In terms of what's lighting up the tape out here, you have a lot of stuff going up, obviously, in the E-mini. It's another action-packed week out here. Over 3 million contracts, about 3.1 million contracts changing hands. The lion's share of that flying fast and furious in the contract expiring in a few minutes and the contract expiring tomorrow, listeners. So pick your strikes of 0 day, and they are all trading fast and furious right now, especially a day like today where we are whipsawing quite a bit. Interesting stuff. The hunt for yield continues as people continue to find different ways to carve out put bombing in the E-mini, including the par puts out here this week, expiring in 18 days. The 6,000 puts trading 17,000 times on Monday, all opening there. So yet again, the folks love to find a little bit of downside. This time going out a little bit farther, though, 18 days. So could the 6,000 strike become relevant in 18 days? Well, today's sell-off continued, perhaps, but seems like we are mitigating. And then folks hunting for a little bit of interesting upside, a little bit farther out as well. Always interesting to see size trades going up beyond the 12 to 24-hour window because so much of the paper is lined up these days, including an interesting upside vertical going up on Monday. I guess Monday was the big day for the S&P this week. We saw it was the 69 half, 70 half, so 100 handle vertical went up on Monday, listeners, about 21,000 times. Of course, we're hanging out right now in the S&P. We just recovered a bit. We were hanging out 68 half or so, have rallied to right around 6,900 right now. So this is still out of the money, but you've got 21 days to go. Average price for this was around $40, Carley, 39 3/4. So would you be nibbling on this to the upside? Would you like this as a little bit of a potential covered call sale with some protection? And what are your thoughts on this 100 handle vertical with about 21 days to go?
Yeah, I think both of the examples you talked about are pretty interesting. I'm just eyeing those 6,000 puts that expire in 18 days. It's a weekly Monday option. And I'm so old school. I stick with the weekly Fridays for almost everything. So it's weird to me to see that much going up on the Mondays. Yeah, these are real interesting trades. Probably not my style, but I can see why anyone would want to participate in them. The reality is they're very low risk, and if they do happen to pay off, it's a big bang for your buck type of trade. But the odds are not great for either, in my opinion.
Interesting to see size trades going up outside of that 24-hour window, Carley. I didn't know that was possible anymore. I didn't know we looked that far ahead in the world of equities. Yeah. Speaking of
I was just gonna say, I think I'm getting too old for this. Like, this is things are changing too quickly.
Who was the guy, not Mel Gibson's character, but the other one in Lethal Weapon, who kept saying, I'm getting too old for this. You're that character now?
Exactly.
Danny Glover's
I think
character.
I am.
You're Danny Glover in the Lethal Weapon. Yes, that's
Yes.
All right, let's keep rolling to an index that took the lion's share of the beating today post Nvidia. This is, of course, the Nasdaq. At one point, it was off about 2% today. It has recovered somewhat. It's off about 1.25% right now, but obviously things not looking great so far this year for the mega cap tech names, and that is reflected, of course, not just in the S&P, but also in the Nasdaq. Nasdaq having a pretty decent week, 212,000 contracts on the tape. Like most products these days in the equity world, it is very heavily biased towards the 0 day. I mean, again, a day like today where we're selling off 2%, pick your strike. And near the at the money, it's got some decent volume going up on it out there. But Carley, before I dive into some of the flow, a lot of people are fixating on the mega cap tech names and how maybe this is a year of rotation out of them. What are your thoughts on what we're seeing on a blood red day in the Nasdaq?
Sure. So it is very obvious that we are seeing some rotation, and we can see that in the S&P 500 index. Obviously, the index hasn't managed to stay as high as it is because we're seeing money come out of tech and then going into all the other S&P 500 stocks. So it's been interesting to watch. What my take on it is, I feel like people are just seeking somewhere to park their money. I think I've talked about it on the show before. There's so much liquidity in the system after the pandemic. We shot all the bazookas at the money supply, and now we're at this situation where a lot of the typical assets that people have been putting money into are so overvalued, or at least perceived to be overvalued. And I agree with that people are just shopping around to put their money anywhere. And the ironic thing is they want to put it anywhere except for treasuries, which I know I'm old and I know this isn't popular, but treasuries are really not a bad place to be honest. But everybody's ignored them in their portfolios. Everybody's ignored them in their trading accounts. But that might be kind of the sleeper here on the board. So I'm going to say, I think I said it a few minutes ago, but I think in the overall scheme of things, when it comes to tech stocks or the S&P 500 index, I think we've got the potential for a little bit more upside here. If you look at the chart, there's lots of resistance overhead, but the problem is if we start cracking below support in the Nasdaq, my view is 23,850. So let's say we get below 23,850. I think there's really nothing stopping it until we get much, much lower. The same trend line that saved us in April of 2025 comes in at about 19,000. So we really don't want to see prices crack below 23,850.
That would certainly be interesting. Speaking of interesting, Carley, I think it's very interesting that the largest trade in the Nasdaq this week, you're talking about putting your money in treasuries. That's a nice, safe place to get some yield. What are your thoughts on doing this for yield, perhaps, instead? Maybe we've gone a little bit too far in the hunt for yield. I was talking about selling the roughly 850 handle out of the money puts in the S&P a few minutes ago. What about going the other way? What about selling? Hanging out not that far north of 25,000 in the Nasdaq. About selling roughly a 700, 650 handle out of the money $10 call vertical. That's what's going up today in the Nasdaq for size. On a day when the Nasdaq is selling off roughly 2%, someone's putting up the 25,710. So yes, a $10 wide vertical. About 16,000 times as we speak, Carley. Have you gotten that desperate for yield?
No, I haven't gotten to that point yet. So, I mean, these are really interesting. Obviously, somebody knows something that I don't, because I'm not understanding it. And I will say, the brokerage and anyone that's benefiting from transaction fees on stuff like that is real winner.
Yeah, that's what we call on the network a love your broker trade. So maybe that's a DeCarley customer. Maybe that's going up over there as we speak, Carley. Yeah. You didn't see it because you're busy. Give me a call. Yeah. That's the kind of client I think most brokers would love. So there you go, listeners. All sorts of outlandish hunts for yield on a wild day and indeed a wild week in the equities. But there's a wild week in a lot of products right now, Carley. So where should we take our show next?
I think everyone's going to assume I'm going to say metals, but I'm going to say energies.
I had a feeling you were going to go to your old pal, the Widowmaker. All right, listeners, to the energy we go.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, go into that same drop down where we started the show. Pop out at equity indexes. You're only going to go up one slot to energy. It is an alpha order list after all. And then I'll let Carley decide. Does she want to go nat gas or does she want to get a little bit crude, madam?
Crude oil.
All right, to the world of WTI we go. Go to the top of that product family list, listeners, and head on into the product list. Of course, WTI right at the top there. And again, selling off this week about 1.6%, a little over a point. Obviously, if you go back to the end of our show last Thursday, of course, everyone's new frame of reference. And then WTI is off, closing in on 2%, about 1.75%. It obviously has been a turbulent time in the crude oil market and continues to be. We're talking about sending more fighters to Israel right now and ratcheting up even more tension on Iran right now. All that with WTI hanging out right around 65.40, 65.39 right now. So right in the middle of that 60 handle range. It's been kind of hanging out in for a little bit, putting up some serious numbers this week, though. 869,000 contracts, so threatening 1 million contracts already. Probably going to get there by the end of the day tomorrow. So again, all it takes is a little bit of a dust up, a little bit of a ratcheting up of tension in the Middle East, and we see a commensurate increase in WTI volume. Before I break down some of this, Carley, 1 million contracts, a lot to get to. What's catching your eye in the world of crude oil right now?
Well, I mean, I think we all recognize that crude oil has been in a bear market for 4 years. This is the 7th rally that we've seen in oil since peaking in March 22. And each and every rally has been on basically the heels of some sort of violence in the Middle East. And I think 1 or 2 of those might have been Russia-Ukraine violence. But the reality is the market anticipates and prices in barrels being removed from supply, but we have yet to see any barrels removed. In fact, we keep adding barrels. I think everybody's kind of forgot about Venezuela. If you take the low estimates of Venezuela, they're expecting in 2026 to add 1 100,000 to 200,000 barrels. Some of the higher estimates are more like 400,000. So if you pick something in between, it starts to be somewhat material. And then if we're talking 2 years out, we're looking at maybe double or triple those numbers. So for some reason, everyone's focused on Middle East when I think the real story is Venezuela. And if you look at a chart, we're right up against trendline resistance. Again, we've seen this movie before. Exactly 1 year ago, oil rallied from 55 to roughly 65, 70 on the U.S. dropping bombs in Iran. Exact same story this time, although last time we didn't know about it till after the fact. The market started rallying before we knew why it was rallying, and now we're getting the information up front, and we don't even know if the information's correct, right? We won't know till we know, but even if it is correct, unless there's some ongoing conflict that really threatens the oil markets, I think we probably see a repeat of what we saw last year, which means we sell off somewhere between here and, maybe we go see 70 or so. But I think the big play here is to just buy puts, because at some point, if we get past this Middle East issue, I think crude oil goes much lower, and puts are very cheap.
Let's find out how cheap some of this is, listeners. But before we get there, let's go out and see what's lighting up the tape out there. Like we said, a pretty active week, threatening 1 million contracts already. If you want to know where the action is centered right now in WTI, it's not in the contract expiring in 1 day. Unlike the equities, only 5% of the flow is going out in that contract right now. So very interesting. You take the S&P and most of the equities, that's usually somewhere around 30+%. So interesting dichotomy here. We're going all the way out instead to April. A whopping 19 days, listeners. The vol right now in April, listeners, about a 59, up 5.6 points. So looking fairly juicy for WTI. By the way, the April contract has done 48%, so nearly half of the flow out here this week, going up in that contract that expires in 19 days. Again, the vol 59 right now, up about 5.6 points. Skew-wise, we saw calls were bid last week, 17.2% bid. This week, they are getting even richer, listeners, 21.6% bid. The puts last week, nobody wanted them, 7.9% discounted. This week, 14.7%, so they're getting even cheaper. So Carley, vol's ticking up, but the puts are coming in. So that means nobody wants your puts, Carley, which maybe means they're a screaming deal for you. What do you think?
I think so. I mean, we won't know till we know, like I said, but look, you can get somewhere in the mid 55s, which we were just at 55 not that long ago. And if we see 55 again, I suspect we just keep going, because we've knocked on that door multiple times over the last few years. And, at some point you keep knocking on the basement door, it opens up and lets you through, and it's generally pretty swift. So somewhere in the mid 50s for April, 19 days, you can get them for less than 500, far less than 500, maybe half of that. I think it's worth a shot.
Yeah, a lot of people are flocking to the upside right now, which is maybe understandable given all the headlines coming out of the Middle East right now. Folks have still a little bit of concern. How about an April 80? That's what's leading the tape out here in a hot week in WTI, listeners. They've changed hands 63,000 times. That is nothing to sneeze at, including about 52,000 of them going up yesterday. That is opening flow. About 6,000 today, 2,000 on Monday, 3,500 on Tuesday. If you're wondering what an April 80 was going for yesterday, it was, 88 cents. So, again, you don't have a lot of time, 19 days, 80 handle. It's pretty far out of the money, but I don't know, Carley, maybe you like this as a little bit of it's not that cheap of a flyer, but it's a flyer. What do you think?
It's a flyer. I mean, $80 is already $15 away, and I think the market's already priced in probably what it's going to price in. I mean, again, unless there's something really out of the ordinary. But if you remember last year, it was a one and done kind of thing, and if I suspect the Trump administration's done a lot of work to keep oil prices lower, or maybe we don't want to give them all the credit for it, but I don't think they're going to intentionally go do something that's going to damage the scenario that they've built. So I'd pass. I mean, it's interesting because the $80 is $15 out of the money on the upside, but if you go $15 out of the money on the downside to the $50 put, it's only $100, so it's almost a tenth of what the cost of the call is. To me, that's too rich.
There you go. That's that skew. It's screaming to you, Carley. It's a screaming deal. If you like, maybe you like the 85s, you want to make, why not swing for the fences, right? Listeners, if you're going to go 80, why not 85? Maybe you want to save a little money. The 85s are pretty hot this week as well. 52,000 of them. Again, the big day was Wednesday. It is possible that it was a vertical. About 38,000 of the 85s going up on Wednesday as well. If it was a vertical, it was done on some wild ratio because obviously they did far more of the 80s than the 85s. So 85 straight up were trading yesterday for about 59 cents straight up as they were, listeners. Folks just had to have themselves some upside yesterday. So maybe you like the 80s for 88 cents or maybe you like the 85s for 59 cents, listeners. But maybe you want to go the Carley route. Maybe you like a little bit of put action. Well, then the most active put we have on the docket this week, well, there's a couple of them actually. One of them's a little bit surprising. Maybe you like this one. Looks like the most active put on the list this week, Carley, is actually going all the way out to June. See, June 55 puts traded nearly 20,000 times this week. The big day was actually Tuesday and yesterday, about 6,000 and change both days. 3,800 on Monday and about 3,600 have traded so far today. So double put by June expiration. That gives you 77 days. So you're buying a heck of a lot of duration. And that future is only at about a little bit shy of the 65 handle. So you're talking less than $10 out of the money, Carley. Maybe you like that June double put, Carley?
Yeah, I don't think that's a bad play. I'm kind of cheap when it comes to buying options, so I'd probably go a little further out and save some money. But you're right. Let's not forget, we've seen oil move $10 to $15 in a single day. I've seen it happen in a couple of minutes, to be honest. So it's not as far out as it feels. We're in a pretty low volatility environment when it comes to futures prices. We've been trading on both sides of 65 for a long time. So I feel like the market's complacent. And if we do get a big move, it could be kind of earth shattering. So I'd probably look somewhere around the $50 strike for June and just buy the time and have a foot in the door, see what happens.
I don't have the June double puts. I do have the May double puts. We're trading for 74 cents earlier this week. So tack on a little bit more, listeners. Maybe you'll get a ballpark for what the pricing is for those June double puts. If you want to buy a little bit of duration, you want to take advantage of maybe some of this skew, like we said, not exactly pricing these puts like they're hard to come by. So interesting stuff out here. Let's look at the skew really quickly in June. The put skew there is not quite as decimated as it is in April. The put skew in June is about half that. It's about 8.4% discounted versus about almost 15% discounted in April. So a little bit cheaper. Actually, I take it back though, because the June vol is lower. The June vol is about 13 points lower. It's only a 46.86. So net, you're probably still paying less with a lower vol level out there. So interesting stuff out here. Maybe you're with Carley, listeners. Maybe you want a little bit of a deal out here in a little bit of downside nibbling, or maybe you want to roll the bones to the upside. You got an embarrassment of riches out here. Carley, let's get out here really quickly to talk about your other beloved product. I think I'm legally obligated whenever you come on to talk about Nat Gas, the Widowmaker. Obviously, it's lighting it up again this week, off about 6%. It's been, if you take away the madness that is metals, one of the big stories of this year has been Nat Gas and how just, I won't say easy it has been to play it so far this year, but I would say cliche. It's playing out in a very cliche fashion. It pops in the cold winter weeks, and then it comes off even more aggressively. Carley, what are your thoughts on what we're seeing out there in the old Widowmaker?
Yeah, you're absolutely right. In fact, the ironic thing is this type of price action, as you mentioned, the winter rally and then the subsequent sell-off is what people try to catch each and every year. And it generally fails because if everybody's trying to do the same thing, it rarely happens, right? So I think what probably happened this year is maybe everybody had given up on it. And so that's probably why it was allowed to occur. But it has been textbook. And I do continue to believe, like, generally once we get past shoulder season, you usually see natural gas just continue to press the lows on the front month. And I think that's probably what we're going to see. My target's about 240 in nat gas. So if you're somebody that wants to try to play the upside, because there's a lot of fundamental stories floating around with the AI story and all these sorts of things that are supposed to be bullish for natural gas. And I think eventually they will come into play. So somewhere around 240, might consider buying some calls. If there's enough vol in the puts, maybe sell some puts, buy some calls. But I'd probably wait just a little longer because we probably do get cheaper.
Maybe some folks are believing that that story to the upside. Maybe that's what's driving some of this flow out here. Because, like we said, it's a decently active week. Not as active as we've seen nat gas in the past. Obviously, it's done well north of 1 million contracts very easily. This week, 632,000. So a rare week where WTI is beating nat gas from an overall volume perspective. That said, the big dog in terms of expiration cycles is going out to April. We're going out 28 days in nat gas right now, listeners. That's where about 58, almost 59% of the flow this week is going up. So we're going to hang out there. By the way, nat gas in that future hanging out at about a 282 right now, off 15 cents or another 5.25%. Just since Monday, you go back to the end of our show last week, obviously it's off about 6%. And skew-wise, we are starting to see maybe some folks thinking maybe this is a bit overdone. We shall see. The puts last week, 2.6% discounted. That has increased to about 8.2% discounted. So maybe some folks are deciding to blast away on some puts. The calls last week, 5.4% bid. This week, 12.3% bid. And let's talk a little bit of vol as well, because nat gas vol has been explosive of late, coming back to earth now, 54.14 off 4.25 points this week. So comparatively, what we've seen in nat gas, a 54 vol is not that crazy at all. What might be crazy, depending on your opinion, listeners, is what the most active contract is out here in nat gas this week. It's the 4 calls. The 4 calls have lit it up nearly 36,000 times this week, which is kind of wild. Now, right behind it, we have about 35,000 and change of the 3.5 calls going up this week as well. So maybe you might think, okay, maybe we have a bit of a vertical or a bit of a roll, except for the fact that it doesn't trade 1-to-1 on really any day except potentially Monday. It might have been a roll of about 5,000 of it on Monday. Otherwise, on Tuesday, we have 6,000 of the 3.5s trading against 12,500 of the 4s. So maybe they're doing it 1 by 2. On Wednesday, it goes the other way. 3.5 calls trade 16,000 times versus 5,100 of the 4s. And today we're going the other way again. 8,500 of the 3.5s versus about 12,000 of the 4s. So it all adds up to about the exact same flow, but it went up in very different ways. So it doesn't really have the feel of a big vertical trading throughout the week. But nonetheless, it's the 4 calls about 36,000 times and the 3.5 calls also about 36,000 times, taking your top spot. If you want to go to the put side, though, listeners, puts are right behind it. It's the 2.5 puts, again, also in this April cycle that has about 28 days to go. They've gone up about 34,000 times this week. The big day, actually today, 14,000 going up today against an OI of 31,000. About 10,500 yesterday, 8,000 on Tuesday, only about 1,300 on Monday. So 2.5 puts, looks like from the way the skew is shaping up, listeners, and Carley, that maybe folks are selling the 2.5 puts, buying the 3.5 4s, or maybe a 3.5 4 vertical as well. Carley, you like that as a potential risk reversal, or is April not far enough out for you?
You know, I probably wouldn't be comfortable doing that. For the 2.5, you'd only be collecting $400 to $500 for me. With, people have had their heads handed to them this year, not with short options. So if I'm going to sell an option, I want to make sure it's worth it. I probably wouldn't do that. I'd be more inclined to just buy the 240s, maybe the 250s, somewhere in there and wait. Because like I said, my downside target is 240. I think we probably get there, and if we do, be a little more aggressive to play the upside. The interesting thing about these types of plays you mentioned, like the real big volume, kind of at outlier prices, 354, we probably won't see those. But what's interesting about the markets now is, as we're getting a lot more speculators into commodities and buying these very large positions and these out of the money options, you have to imagine if somebody's buying those options, someone else is selling them. And so at some point it becomes an issue of whoever sold them, probably market maker, dealer, whatever you want to call them. they're forced to buy futures to cover themselves. So you get a gamma squeeze. So it causes all kinds of chaos. I suspect that's a lot of what happened when nat gas had that crazy run a month or so ago, whenever that was. So it's interesting So sometimes the market positioning and the market play itself means more than fundamentals or charts. Sometimes that's what tells the story.
Well, it looks like maybe my early suspicions were correct. 3.5-4 did trade today, but as a 1x2, so it is going up on a ratio, Carley. So maybe that's a little bit more attractive for a net of looks like a 2 cents. So it's not a big debit or credit really either way. And the 4 calls trading by themselves today for about 1 to 2 cents as well. So pick your poison how you want to play on the upside there, listeners. But it looks like there was a little bit of a ratio today, but it looks like it went back and forth so many times this week that interesting strikes nonetheless. Speaking of interesting stuff, Carley, where should we go next? What other products are catching your eye this week?
I guess we can take a look at metals, maybe focus on something like copper that's a little out of the headlines.
A little bit unheralded. All right, to the metals we go.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners. To the metals we go. Pop out of the energy asset class. You can go all the way down to the bottom of the list. It is an alpha order list after all. To metals. And then normally we go to precious, which is at the top of the product family list. We're going to go 2 below it. We're going to get base on the show today, listeners. And then we're going to click on into the copper in the product category. If you did that, you see copper trading right around $6 right now, up about 13 cents or about 2.25%. Of course, since Monday, you take it back to the end of our show. Last week, it's up about 3.75%. So a good little run for copper. Copper, very much like soybeans, what goes on in China tends to drive copper just like it does beans. And probably that's why we're seeing so much talk about copper and soybeans right now. China very much back in the news out there. Carley, what is catching your eye in the king of the base metals, madam?
Well, what I like about copper is it hasn't attracted the meme style frenzy we've seen in gold and silver. So it's a little calmer. And I'll say copper options used to be untradeable. There used to be almost zero liquidity, no market makers. And the CME has done a really great job at changing that. And so now it's actually I don't want to say it's I'll just say it's a nice place to speculate now. Whereas in the past, it was either you traded futures or you didn't. There really wasn't anything in between. And the CME has also added micro futures. So if you are trading options, you can kind of hedge your delta with micro copper futures. And so it's actually made it into a pretty attractive market. So don't scratch copper off your list. Take a look at it. And there's something to be said about markets that haven't been infiltrated by mass speculation and frenzy. That said, copper is a boom and bust market. We rarely hold highs and lows in copper. Usually we get these explosive moves to the high end of the range and then we give it back and then we wipe everyone out on the downside. Unfortunately, that's just the nature of it. It's not like gold and silver kind of have this a little more of a perpetual bid of precious metals buying or currency behaviors. Copper's a little different. It is a true commodity and it can be a little wild at times, so be careful. But I do think copper probably retests somewhere around 650. That's the upper end of the range. It's a 20-year range, so plenty of data to work off. And if we do get up somewhere around 650, I'd say it's probably a time to buy some puts. The last couple of times copper has sold off, it's done it very sharply. You might recall in July of 2025, I think it was July, when Trump tweeted about tariffs on, then tariffs off, and we sold off from 580 to 430 in, I think that happened in a day or a couple of days. So you'd be surprised how cheap the copper puts can get every once in a while. You're going to have to go way out of the money, but if we get up to 650 and you buy a deep out of the money put somewhere 450 or lower, you probably get it for less than 1,000. And, getting a foot in the door is really the most important thing in copper.
Let's see what we're spotting out here in copper this week. And you're right, Carley, this was a product when we first started doing the show, even before it was This Week in Futures Options, when it was the long and short of futures options, going back a ways. And now, you're right, copper was a trade by appointment product that had no liquidity in the options. We barely ever spoke about it. So they have done a good job of growing that flow out there right now, putting up about 20,000 contracts this week. And we have seen copper do a lot more than that. So this is actually a somewhat surprisingly quiet week out there on the volume front for copper. Like we said, that future hanging out a little bit north of the 6 handle right now, and about 50% of that 20,000 contracts. So obviously 10,000 contracts going up in the April contract that has about 28 days to go. You might be wondering, what is the vol in copper? How does it stack up against some of the other metals? Well, April vol 31.5, off about 4.3 points. So like a lot of our other metals, coming back to earth slightly from a vol perspective out here. Skew wise, the calls were where the action was last week. That continues this week. The calls were 4.4% bid last week, 4.7% bid this week. So ticking up a little bit even as the vol is coming back to earth a little bit. The puts 1.8% discounted last week. This week 2.7% discounted. So this skew, a modest discount to the puts, a modest bid to the calls. Looks kind of like an old school precious metal skew before things got crazy out there, listeners. And in terms of the action, what is leading the dance out here? It actually isn't in the April contract. We're going out to May instead, which has 60 days to go. And that's where the most active contract is right now, the 6.5 calls. So about half a buck out of the money calls have changed hands about 2,300 times, which again, nothing to sneeze at when you're only talking about 20,000 contracts in the whole complex. So again, 2,300 doing over 10% of the total flow out here right now in these 6.5 calls. The big day was actually Monday, 1,500 going up on Monday, and you got a few hundred going up on Tuesday, 600 on Wednesday, not that many today. So total of about 2,300 on the week. There's OI on this strike though. There's 3,400 open on this strike. So potentially they have more to add on here. We shall see. That is by far the big trade. Beyond that, we have to go to the 6.5 calls in April. They've changed hands about 750 times this week. So again, looks like it's a lot of upside. Carley, the 6.5 strike, either in about 28 days or where it seems like a lot of the flow is going about 60 days. Either of those float your boat, madam?
The thing about copper options is in this environment anyway, although copper hasn't gone the way of gold and silver, there's a lot of expectations that it will. And so I've talked to a lot of retail traders, and they've been kind of consistently wanting to buy calls up here, hoping that copper's the new silver or copper's the new gold. So I feel like they're a little rich for me. I prefer to wait to see. I do think copper goes a little higher here, and if it does, I'd be a put buyer. So I'd just let the calls go for now. I wouldn't touch them.
You're saying some of the speculators starting to get in here, starting to drive up some of these prices, Carley. They're trying to get ahead, trying to find the next silver before it's hot, Carley?
I believe that's what's probably happening, yes.
All right, Carley, that music means we come to the end of our journey this week on the show. We hit on some of the usual suspects, of course, the Widowmaker. Got to get there when Carley's on the show. Threw in a little WTI, which is fun. We haven't talked that much WTI of late. Of course, equities, yet another wild day out there in the equity markets. Seems like the sell-off continuing to mitigate, so we'll see if that continues or if we start just drifting back down the other side and driving a lot of weird and wild flow out there. And of course, we wrapped it up getting base. Are you in on the copper train, listeners? Are you like some of Carley's clients, maybe starting to try to nibble to the upside, trying to find the next silver before it explodes? I'm curious. Hit us up. Let us know. And Carley, if folks want to reach out to you, see what's cooking over there at the land of DeCarley, maybe, dare I say it, buy some copper upside or let you talk them out of it, where should they go? What should they do?
Well, you can find us at decarleytrading.com. That's DECARLEY trading.com. You can sign up for a free newsletter, free trial of our newsletter, I should say. And again, we're a futures and options brokerage, but if you're not interested in trading with us, maybe you have your own broker set already and you don't want to make a switch, that's fine. You can also consider subscribing to our Substack, DeCarley Trading. carley.substack.com.
Check them out, Carley Trading, or check out her Substack as well. A lot of good stuff. A lot of folks hanging out on Substack over there these days, including Carley's nemesis, Mr. Dr. Bix, who I will be chatting with tomorrow on Vol Views. Of course, if you want to check out all these reports for yourselves, you know where to go, cmegroup.com/twifo. That begins your journey over there at CME. Where you go from there, it's up to you. A lot of great stuff. Research, education, product specs, all that cool stuff. But start over there on the reports. I think you're going to find some good stuff. And they're running 24/7, so you could crunch soybeans at 2 a.m. on a Saturday if the mood strikes you. We don't judge here. We'll be back later today with the hot options report, breaking down a wild day in the equity markets, of course, post Nvidia earnings. A lot of flow. Nvidia had already put up well over 4 million contracts a few hours ago, so we'll see how it tops out the day and what the hot options are out there. Then we're back again tomorrow, like I said, talking vol. Spoiler alert, there's something to talk about this week. Should be a fun time. Then we wrap it up with our pro friends on options oddities. If you want to join that party, theoptionsinsider.com/pro is the place to go. Before we're back again next week, all the way out to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.